Good morning. Today is Wednesday, May the 10th. The time right now is 9 minutes to noon. Now let's do a little bit of recap and what's going to be market looking at tonight. Okay, today we have the release of the CPI numbers. Of course, the market will be watching these numbers like a hawk. And over the last 48 hours, mean to say Monday and Tuesday, the market basically was in consolidation mode. There was hardly any follow-through buying. Even after Friday's non-farm payroll caused the market to rally very aggressively, but there was no follow-through buying over the last 48 hours, and everything depends on tonight, the CPI numbers. Market is expecting the last month number to be somewhere around 5%, and if the market release a number that is better, which is meaning to say lower than this estimate, then the market have the fuel to actually continue its rally to the upside. So the market is just waiting for the release of this number. So I think the momentum and suggest the market is looking for a buy. Okay, so if the market in the Dow Jones, for example, we can see the market has actually rallied from a low of 33,000 all the way to 33,550 thereabout, and is waiting to getting for another burst to the upside, this time taking out the year's high, possibly at 34,342, which is this point over here. Okay, so if the market can somehow pull back a little bit, maybe as a market went into confusion, okay, in the initial minutes of the release of the CPI, market ideally come down to around maybe 33,000 245 to 33,250 levels, which in this bracket of price, I think that will be a great level to pick up some more long position, putting your stop just below 32,900 in exchange for the possibility the market will go into a new high for the year and even possibly take out last December high of 34,712. And if that's the case, the market may actually target much higher prices, somewhere between 34,850 to 35,170 range, just below last April high of 35,492. So these are all possibilities. Okay. However, if the market collapse below 32,900, then obviously it is setting the stage for a decline, a very deep decline all the way to 31,000. Okay, so this scenario right now is not the preferred count. The preferred count is for another extension of this rally, to finish this rally from 31,429 all the way towards a target of 35,170. That will be the ideal outcome. Okay, just look out for it. Okay. Now, the S&P 500 also have similar structure. After the last Friday rally, all the way to 4,147, the market has stalled. Okay, and if we have a marginal pullback, ideally between 4,100 to 4,086, that will be a fantastic level to pick up some more long position, putting the stop below 4,000 in exchange for the possibility of market taking out the year's high, okay, at 4,200. So if this is the case, the market has the potential to rally all the way to challenge last August high, which is 4,325. And if this cannot cap the run, then the market could be looking at a challenge of anywhere between 4,370 to 4,520 levels. So this is the immediate outlook, very, very bullish outlook, despite the less than ideal economic data release, which points to a possible recession in the US economy, possibly in the next quarter. Okay, so do take this into consideration. Okay, now the one that is actually leading the charge higher is this thing called Nasdaq 100, which essentially consists of tech stocks, which has been the darling this year, unlike what happened last year. So on Tuesday, we can see the Nasdaq 100 has a marginal high for the year at 13,302, and there has been very, very little pullback. And if somehow the market can pull back to anywhere to test the 13,000 levels, I think that will be a great level to pick up some more long position, but that possibility is now very, very high. It may just continue to rally higher to test the last August high of 13,720. And again, if this level cannot cap this run, there's a very high likelihood that the market may gun for 14,135 to 14,715 thereabout. So you can see this is my target range. Okay, so let's watch out. Okay, over in Asia, we can see the Hong Kong market has yesterday we can see there was a very sharp drop, a relatively sharp drop after hitting 20,321.7, which is within this bracket of prices which I've highlighted previously at 20,304 to 20,485. And the market turned down from there, and largely is due to the idea that the global recession is very likely just around the corner, and Hong Kong being a very, very open economy is of course vulnerable to such a negative expectation. So we can see on the technical side, the market fails to rally beyond 20,500 is a bad sign. And if the market continue to trade lower and take out the immediate low at 19,500, it will definitely be challenging the year low at 18,829. And if that's the case, the market could be unfolding the larger three-wave pullback all the way possibly challenging the 17,000 levels. So based on what we can see from the technical, it does look like the Hong Kong equity market is not that bright. Okay, over in the Nikkei, we can see Nikkei has also gone up to test the 30,000, which was kept last Tuesday at 29,278.8, not helped by the fact that it was enjoying an intermittent holiday last week. And prices did rebound yesterday, but again it closed on a week, it did not extend higher. So we can say today the market opens with a slightly softer note. Market has been pulling down from there, and we can see this is a bracket of prices which I've highlighted previously to be an area quite vulnerable to selling interest, and that level is 29,100 to 29,500 level. So you can see market is coming down, and if it does continue to pull back down, I will not be surprised. But the bigger concern is that this is just a very simple a smaller degree three-wave rally. Okay, yes, there could be selling pressure from here, but I think the one that we really want to watch is this bigger three-wave. This bigger three-wave extension could actually see prices challenging at some point in the near future, somewhere between the 29,700 to 30,435 level. So this will be the bigger concern. Okay, so we still have some time before the debt ceiling in the US will have to be resolved, because everybody's expecting somewhere in June that the if there's no resolution to the debt ceiling. Yesterday, the President Biden met the leader of the House of Representatives, Kevin McCarthy, and it seems there's nothing coming up from that. There's no press release. There was no major news update, so it means they are at a deadlock. And as the time is ticking towards June the 1st, the pressure will build up quite considerably. So if we have a rally in equity prices, get ready for a massive sell-off if this debt ceiling cannot be resolved, which will result in the US defaulting for the, a big time. Okay, this could be not the first time it has defaulted, but it will be bad. Okay. And over in the mainland Chinese equity market, you can see yesterday, second half, we have a mysterious drop, okay? Very much in line with what we saw in the Hang Seng Index, and coming in for a very sensitive area of 4,076 to 4,117. This actually may exacerbate further sell-off. And if the market breaks below 3,925, it will target a larger degree decline all the way to 3,936 level. So this will be my target range. Okay, do watch out for this. Over in the energy market, we can see that crude oil yesterday first pulled back before it rallied into a high for the month at $73.74. So this market doesn't want to come down, although at one stage yesterday it looks like it may pull back a little bit. So far we have not had any chance to actually enter a long trade because the pullback has been so shallow. But that doesn't mean it won't pull back. Okay, the market right now, technically speaking, is pretty bullish, but considering the immediate barrier to higher prices is very, very close by at $76.70, and then another one here at $78.90 thereabout. $79.14. So if you buy now, the risk is that the resistance is so near, right? So if we can buy at a more sensible level, that level ideally should be around $68.50 and lower. So if we can wait for the pullback to happen, well and good. If it happens, well and good. If it doesn't, it continues to goes up, so be it. Okay, but I will only like to buy somewhere between $67.50 to $68.70 thereabout. So that will be a better area for me to buy if the market can retrace. Okay, now over in the precious metal market, we can see that the gold prices has actually be struggling higher since hitting a low of $1,999.60, and it has been struggling higher. And we can see as of this morning, the market have a high at $2,038.25 thereabout, and just failing to reach my ideal price of $2,040.50 to $2,050.20. So ideally the market hit this pocket of prices, but If it missed for whatever reason and started to unravel, so be it, okay, because I'm already short gold position, and my immediate target is going to be looking at somewhere between 1943 to 1975 area. Ideally, the market tests the 1950, which is the point of origin, which I've highlighted many times in previous updates. So this is a short-term counter trend trade. If you're uncomfortable, don't do it, because the long-term outlook for precious metal is actually pretty bullish. Now, we are yesterday I did mention, and I want to say again, if we're going to get a pullback in precious metal, this precious metal pullback may last all the way to the end of March. To the end of the month, okay? That means to say just before June, which may actually coincide with the possibility of a US default, okay? So if that's the case, gold is going to rally big time. So if you do not want to trade counter trend, wait for the market to stabilize. If it breaks 1950 and go all the way down, it may drop another $100 per ounce. That will be even better. That will put the gold price somewhere in the lower end of $1,800. That will be a much better price to enter along, and let's see what happens. But in the meantime, this is my short-term target, and let's see how it pans out. Over in the silver market, the market is very stable. We only recently have a marginal high on last Friday at $26.14, and since then the market has gone into a very tight consolidation. And if the gold prices continue to edge lower, we can see silver prices being pulled along together with it, and maybe looking at somewhere between $24 to $24.30. Not very deep correction, but if, like I said, if you have a chance to buy silver, I think that will be a better play, okay? Now, in the dollar itself, you can see dollar actually have a rebound yesterday, all the way in the dollar index to 101.64, and then now we seems to falter a little bit. So we are seeing a three-way bounce, and the three-way bounce ideally should bring us back to 101.86 or to even 102.11. So that will be the ideal place to actually get go short the dollar index. But if the market continues to slide and break the near-term support line, which is represented by this very solid black color line here, and if it closes below here, then the market is possibly coming down already, okay? And the immediate target is somewhere between 99.64 to 100.13 in the dollar index. So if the dollar index is weak, meaning the dollar is weak, the other principal currency is likely to edge even higher. Yesterday, we saw sterling falling back from 126.66 all the way to 125.77 before it stabilized. And this one the chart wise, it does look like it still have the momentum to even trade higher beyond 126.66. My immediate target is somewhere between 127 to 127.50 levels. I'm already long. I'm taking profit. I'm placed an order to take profit at 127.35. There's a possibility it may go even beyond this 127 half levels, but again, I'll be more than happy to exit at 127.35. Okay, and then I will watch. Over in the euro versus sterling, I am not as bullish. That the market has actually come down from 110.50 to 109.40 before it stabilizes. Now, there are two possibilities here. If the market continues to edge lower and take out the 109 level, the market is getting ready to see a further decline all the way to 107 at the minimum. Now, if the market bounce back, ideal place to sell right now, the most likely scenario is the market bounce back to 110.20 levels, and then that will be a better area to short in expectation the market will come back down again, okay? However, if the market continues to edge even higher to 111.26 to 111.69, that is also another possibility. So if that's the case, I will add on to my short in anticipation for an eventual unraveling in the euro versus the dollar. Okay, minimum target 107, okay? Over in the Aussie, now, Aussies have a remarkable rally from 0.6575 area all the way to 0.68, which is just below the previous high which we saw in April. Could not quite take it out, and market now is pulling back. Now, there is a possibility, okay? I'm not saying that it cannot. This rally here may be actually quite sustainable. So what we are doing right now is to wait for the market to eventually pull back a little bit deeper, ideally to somewhere between 0.6660 to 0.6690 levels, to see if that can happen. That will be a better area to actually go long. I would love to go long on the Aussie right now, targeting 0.68. But if you feel that the market is basically consolidating in a very wide range, then you can choose not to engage this market for the time being and just watch. Okay, now this is the one currency that I'm very excited about, the dollar versus the yen. The high at 137.77, which is this bracket of prices which I have highlighted the week before, that could be an area of selling interest. Unfortunately, I wasn't brave enough to actually take up a short position here, and I missed that run all the way to 133.5, and now I'm waiting for a second chance. Market has since rebounded to 135.36 this morning, and if we can just manage a little bit more, ideally in the afternoon session when London opened, somewhere between 135.65 to 136.15, that will be a better area to go short. It is not a very low risk trade because I have to put my stop above 138. Okay, but if you're comfortable with that, then my target is at 129.65. Okay, so in comparison, this will be at least a let me see, more than 1:2. Okay, maybe 1:3 risk reward ratio. Okay, but the fact that you have to put a stop above 138 may not be a comfortable thought for a lot of people. For me, I'm okay. Okay, now the thing is this, dollar Canadian is also looking to be very bearish. Okay, so that is a case that reinforced my outlook for dollar yen actually. Okay, you can see that dollar CAD has been falling from 136.40 this month, and it has gone down to as low as 133.15 before it bounced. So this bounce has been very, very shallow. I remember talking to you about this yesterday. I was saying that if the market rebound, it will be a pretty shallow rebound, and I've targeted a price between 133.90 to 134.40, and the market went up to 134.06 before it stalled. Okay, can it go higher? Maybe. Okay, but this is a market increasingly looks like lower to higher to sell. Okay, so if this is the case, I have previously noticed that this 132.75 is a immediate barrier to cross. If the market holds here, then you see the risk reward will not make sense. But if the market can punch below this level and head towards last November low of 132.26, then I think there is a little bit more incentive to go short. Okay, actually my target is around 131. So if you look from this perspective, depending on how high this market rebound, okay, if you can manage to sell as high as you can, okay, during this period of rebound, then if you target 131, it does make sense. Okay, but in the meantime, if you're not comfortable, just watch. Okay, over in Bitcoin, we can see Bitcoin is still in a very wide consolidation range. The bottom is 27,000, the top here is 30,000. So within this 3,000 points range, $3,000 range, the Bitcoin has been gyrating between these two extreme here. But recently we can see prices of Bitcoin went out to test the lower end of 27,000 to as low as 27,290 and stabilized. And instantly this is an area of opportunity. I previously highlighted this area at 27,000 to 27,550 dollars, and the market actually stabilized here, and it looks like it may be building a base here. Okay, anyway, I've already gone long on Bitcoin. My expectation is that it will challenge the $30,000 one more time, and this time there's a very good likelihood that it will break this level to challenge 31,000, maybe even higher. And I'm actually quite a little bit bullish on Bitcoin now. Technically speaking, I think there's a very high likelihood the market may even go up to the upper end of 32,500, possibly even 33,000. Okay, so based on the risk reward comparison here, it is actually a fantastic trade setup. That's for me. Okay, you have to do your own analysis and decide for yourself whether this is a good trade setup. In the meantime, this is all I have for you. Now remember, tonight we had the CPI numbers at 8:30 p.m. Market expected 5%. Okay, watch out, and I'll see you tomorrow. Bye bye.